our top performers, or the ones that were performing the best yesterday, they actually were pretty much all red. Money was flowing out of these top performers, and they were actually all flowing into the ones near the bottom of our list. And you can see there's a lot of momentum on these bottom sectors with new. So a bunch of these probably have big green bars on them popping up. You can see these big green bars to the upside. Here's the food and beverage industry, the PBJ, the peanut butter and jam sandwich industry, all these big bars. So we definitely saw money rotating out of what was performing best, and now it's all rotating into the underperformers. And I mentioned that yesterday in our evening update that, we're starting another quarter, and I think there's probably some quarterly rebalancing. So what was outperforming and grew to be a larger portion of somebody's portfolio, those fund managers and advisors are saying, hey, we're too heavy weighted now in tech because it's moved up in some of these other growth stocks. Let's pull some money out of those and let's move them into these underperforming to keep us balanced between the various sectors, 11 key sectors in the market. And then there's a whole bunch of individual little sectors as well. That obviously these are all the sectors that we follow, but it's just rebalancing going on for the quarter, and we'll have to see how all of this shakes out over the next couple of days. On a bit of a different note, we've got a record high for commercial-backed mortgage securities here, spiking way up. We are way up to where we were at the highest level back in 2012, when the real estate, 2013, when the real estate market started to put in a key bottom. We were hitting new highs on defaults, delinquencies for commercial properties. This is not a good sign whatsoever. I find it very interesting, and the fact that there's all these delinquencies, I don't know where all that risk is going to go. You'd think in the bank, like you go look at the financials, the financial banks are doing well. They're pushing up, even though they're having huge defaults and delinquencies on mortgages. Let's just KRE. Let's take a look at regional banks real quick. I haven't looked at this. Obviously, they're nowhere near the highs. Let's just zoom out and see if there's higher highs. Yeah, there's way higher highs. So regional banks definitely, I think, are struggling, and they could be maybe more so holding a lot of bad commercial debt that's going to default. Maybe things are still holding up in this space simply because real estate prices haven't actually really collapsed yet. People think it's a screaming buy and that the markets have dropped 15 to 20%, and that is the housing collapse and the real estate collapse. I don't think so. I think that's just the first little pullback. I think real estate's going to hit hard. So the fact that real estate's still somewhat holding its value, maybe it hasn't hit the books. It doesn't look so bad here. But when real estate does fall off a cliff and things drop another 15 to 25% potentially, that might actually really start to hit the banks, and that are going to be holding all these mortgage-backed securities and things like that on commercial properties, and then we could see a bigger sell-off. So it's going to be interesting how all that unfolds. Now, yesterday we did have the retail space shoot higher. It was like 4% gain yesterday. I'm not sure what the huge gain was there, if there was one or a couple individual stocks that really ripped it higher, or if there was some news out, but definitely we saw space unwind in here. Again, this could be just rebalancing and adjusting of portfolios, but there's a big pop there. And also we saw, I think XLB here, we had a big move up in building materials. We saw in home builders, they all had this huge pop. I feel like something triggered that. So we'll see how this fizzles out, if it's a news-driven move and a pop to the upside, or just quarterly rebalancing, and these individual sectors just got a real bid moving into them and drove them higher. But it's interesting that we're seeing them have these big moves. Again, the economy hasn't stalled out. It's holding its ground. There's things breaking behind the scenes slowly and weakening, but we're definitely still seeing the jobs are holding up somewhat. They've been trading sideways, and we're not seeing the unemployment. Unemployment's holding its ground.